So the private equity market is really benefiting from the availability of capital. There are a multitude of lenders and banks that are providing very aggressive financing structures. So as the economy continues to improve, we're seeing more and more companies grow and become healthy enough that their owners are willing to consider a sale. But private equity firms that own businesses now are trying to sell them to take advantage of the very high exit multiples that are available because of the availability of financing. There's three important factors to consider for moving a deal. Number one, because the market is so aggressive right now, having the right price is very important. Number two, if you can have financing arranged beforehand, that will also really help your chances of winning a transaction. And three, having as few contingencies as possible. Lots of reasons to partner with private equity, but perhaps the most important, and we see this a lot in the middle market where our clients specialize, a lot of the companies that our clients buy are either family-owned or founder-owned. And so when they're selling their businesses or they grow those businesses to a certain size, they need help. They need expertise, they need capital, and private equity firms specialize in that. They're very good at helping those businesses grow further. Many family-owned businesses often reinvest in their business alongside the private equity owner, and they're able to watch and help the company grow through the next generation and profit again when the company is eventually sold. Most people don't realize how prevalent private equity is in everyone's lives. There's over 3,300 private equity firms in the United States. They own over 11,000 businesses that employ over 7.5 million people. Private equity firms are invested in by institutional investors, such as insurance companies and pension funds. So your average policeman or fireman may not realize it, but a lot of their retirement earnings are actually coming from private equity-owned businesses. So private equity firms are a very important part of the U.S. economy, and particularly in the middle market. There are a multitude of financing options available, almost perfectly tailored to individual needs of the private equity firms. One that's particularly prevalent this year is a structure called unitranche financing. It's also could be known as an all-senior structure. These structures are somewhat conservative in that they don't have as much leverage as you would see in a typical buyout, and pricing is a little bit lower. So the lenders are happy because there's less leverage, and the borrowers are happy because pricing is lower. And in a market such as the one we have now, where things are generally very aggressive, the all-in leverage available from a unitranche deal might actually be the same as what would have previously been available in a not aggressive market 4 years ago. We think 2015, the economy will continue to improve. We'll see businesses getting stronger and healthier, so eventually those businesses will be ready to go to market. But right now, it's a great market to be a seller in, and it's a tough market to be a buyer. The availability of financing and the aggressive structures that are out there are causing prices to rise. And I think it's going to be very hard for private equity firms to be able to sell their companies 5 years down the line at multiples that are higher than those right now.